Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
Hey everyone, I'm Jeremy Szafron. Welcome back to Kitco News' coverage here on the ground in Boca Raton, Florida at the Rick Rule Symposium, where there are some real big legends gracing their presence with us here at Kitco. Today, we have one of them, of course, Bob Quartermain. We've had him on the show before, a director of Dakota Gold. Good to see you.
Great to be back.
It's pretty warm here in Florida, isn't it?
It is, yes.
Bob, you've been walking around for, I guess, today. You've been sitting at the booth talking at Dakota. You've been interacting with different investors. There seems to be a lot of optimism in the air this year. What's the investor sentiment like?
Yes, really positive. I think because the gold price is up, then many people here, of course, are invested in gold or invested in silver. And they've seen their equities improve over the last year, and certainly interest. The thing I like about Rick's conference is they're informed shareholders. They come to learn. As you know, they go to the variety of lessons that they're given here. And so they can come and ask informed questions about what we're doing, you know, what our drilling looks like, what our resources are like. And so it's been great. I've been here all today and had a number of shareholders come through, particularly shareholders who live in South Dakota. Yeah. So it's nice to see them here and be able to talk to them about what we're doing in their home state.
Right. Well, I want to talk about that for a second, but we'll get to Dakota because you have some great drill results we'll bust into too. Right. Before we do that, when you look at the macro, the macroeconomics going on, and you look at gold prices, possibly sitting above that 2,300, making some all-time highs. It doesn't seem to be going anywhere. Is this a new normal, and what does that do for a miner?
Well, as you know, when we see quarterly results come out, that there has been inflationary pressures, and I think we discussed that last time. When you look at some of the world's top miners, you know, costs are getting up into that $1,400 an ounce. So margins are getting compressed in that regard, and maybe that's one reason why you haven't seen the equities reacted as well as we might have thought they would. And then in the junior space, of course, financings are still difficult, right? Raising capital, it's very specific as to which projects it's able to follow in that regard. But when you look at what the central banks continue to do, right? They continue to buy. What we see with respect to gold use and technology, you know, there's the conversations around AI. You can only have AI if you have all the servers that provide that. And of course, many of them are built with gold as part of it. So when you look at the, let's say the World Gold Council report from last year, and certainly this last quarter, we continue to see that increase in electronic component of gold use. And so we're going to see those uses go up. We're going to see central bank continue to buy. And at some time, I think it'll continue to translate into higher prices. As I said, I've been in the gold industry for 1977. It's been very rewarding. I'm all in and will continue to be and continue to expect that we will see improved prices.
Now you mentioned it, you've been in this for quite a while. You've seen a lot of different approaches to the cyclicality of what this industry is like. When we think of precious metals now, anything surprise you with the retail audiences and the consumers actually going and purchasing gold at new record levels?
Yes, you know, and that was one interesting fact that came out of the World Gold Council is the fact people are still out buying bars, you know, up to I think about 300 tons. So when you look at overall mine production of around 3,600 tons, it means, you know, almost 10% is being purchased by them. And central banks, again, 1,000, 1,200 tons. What's also interesting, if you look at the silver space, and, you know, at one of our projects, Richmond Hill, we have a bit of silver. But when you look at almost half the silver that was consumed last year, demand was all in electronics, photovoltaic cells. So we continue to see precious metals being used in industrial applications that didn't exist 20 or 30 years ago. And that's a built-in demand, particularly in a world which wants to have a greener economy. We want to have more photovoltaic cells, and we want to have AI, and you need precious metals to power both of those.
Where do you think we're in that green transition? I mean, we've been hearing it on the stage at this show and at this conference for quite a few days now, where it's so important and it almost seems like a new frontier or maybe a new chapter in mining, going and getting rare earth metals and these types of things for the transition. Are we just beginning, and is this going to provide a nice runway?
I think it'll provide a nice runway. What we need is the match with respect to the regulatory and political framework. You know, we hear politicians speaking about it, but we need the regulators to be able to meet those timelines. In Canada, our Minister of Natural Resources has indicated he wants to take permitting from 12 years down to 5. Well, we permitted the Brucejack project, or from discovery to producing, in about 7 years, which was in record time. We want to take maybe double that. So we need that for the industry to be able to deliver what we want to do for 2050 with respect to the aspirations we have for a greener economy and EVs. both with copper and, as you say, with the rare earths.
Right.
And we need to develop those resources here in North America. So we have to get a population which is educated more on STEM, science and technology, and understand that if we want to have these benefits for 2050 aspirations, we need to be able to mine them in North America, and we need the regulatory framework that supports us as miners now, who do it much more environmentally sensitive than we did 40 years ago when I started in the industry.
Interesting. You were talking about how long you've been in it, 40 years. When did we stop educating the audience, right? I mean, I think to it, in Rick Rule Symposium, it's all about educating the investments for the audience and the people that are here at the show. They're really understanding due diligence, and they're getting behind and learning to look at companies and what that is. Are we doing a good job of it?
We are at conferences like this. But I do agree we have to get better at educating the general public, and the best way to do that is in the school system. So we need to have advocates make sure that the curriculum has a good amount of science and technology in it in high school years, or even earlier years. You have Mining Matters or Minerals Ed BC, which provide resources for teachers which kind of do it outside the classroom or associated with it. And we need to have it more inside the classroom so that children who get their iPhones from their parents when they're, young, suddenly realize there's 70 elements in that iPhone. 17 of them are rare earths. There's gold.
Anywhere.
It's not going anywhere. So we're going to continue to do it. But then when people pick up their iPhones and say, we need mining, and we need mining done responsibly because I want to have these assets, that's what we need to get that connection across. And I think there's a bit of disconnect. And once people realize that mining they use every day in their lives, then they need to be able to support it and get that support through politicians, and then let us mine in North America and do it properly and provide the resources we need.
Yeah, you talk to me a little bit about Dakota. I mean, you're revitalizing the Homestake District. You just had some great drill results. Want to get into that a little bit? What you're seeing?
Yes, the nice thing about the Dakota projects we have in the Homestake District, it was one of the world's largest gold mines in district, 40 million ounces produced over 120 years, and that's what got me involved. You have these nice Precambrian rocks, 1.8 billion years old, which have the Homestake Formation in it, which we've hit in our JB zone. We had an announcement in April. We hit one of our best intersections, 4.5 meters of 25 grams of gold, and we followed up and have found additional mineralization in and around it. We had in our holes 26 and 36. And you're right, yesterday we announced resources in the tertiary. And what's intriguing is that's a resource type that had never been explored for or developed in the Homestake District. And so we've been drilling it for the last year. We call it the Unionville Zone. And we've now done a vertical longitudinal section, which is in the press release, and shows that this has size and potential to it. It still strikes down dip towards the old mine, which is 2 miles away. So exciting. And then, of course, we put out our maiden resource in the Richmond Hill project. So lots of opportunities for shareholders in Dakota through these 3 areas that we're currently drilling.
Right, and you got enough capital too. You got some cash in the bank now.
Yes, we did. We did a financing with Orion. Orion is has been a great shareholder, and I had a relationship with them at Pretium. They helped finance the Bruce Jack mine into production, and so they will now be our largest shareholder. And with the funds they have in place and others we had on hand, as well as using our ATM, we have all the capital that we need to meet our budget requirements through this year, which is a great place to be for a junior development company, because that's often not the case here. So we have good supporters because we're delivering good results.
Yeah, I guess that's my next question is, when we look at it, there's some consolidation happening, these low valuations. You just raised this capital probably because, everyone knows you as well, Bob, but how difficult has it been for the juniors out there?
It's really challenging. We've been able to raise capital because we have projects and ones we can see developed, like Richmond Hill, which sits 1.5 miles north of Core's Wharf mine. So we're proximal to an existing mine, and that can attract a different level of capital. But if you're in an exploration company right now, trying to find that becomes challenging, because that sentiment, as we talked about earlier, is not there. The prices moved up, but we haven't seen the equities move up along with it.
Right.
And so if you have capital, many are preserving it. But the right assets always attract the right capital. I mean, I've been very focused. We're here at the Rule Summit, and Rick and I have been doing business since the 1990s. And even when times were challenging, either at Silver Standard or Pretium, because we had good assets, we always had an ability to be able to attract capital.
Yeah, I guess that's a little bit of the IP behind this show too. Okay, talk to me about these strategic partnerships, because as the cost of capital has been so hard to come by, M&A is starting to happen at these evaluations. Is that going to continue?
Yes, I believe so, because it's a good way in order for companies to be able to get major shareholders in. Often you'll see a major company maybe take a 4.9 or a 9.9 interest in a company like Orion has with us at 9.9. And we're seeing that across the industry more because, again, exploration is difficult, in a global sense. And you've got these large mining companies which need to be able to replace resources, right? The way we're mining gold at 48, providing 4,800 tons of gold a year from demand, but only 3,600 tons of that actually comes from mining companies. So they need to be investing in quality exploration companies, and that's one way to be able to do it. And then ultimately, perhaps do a merger acquisition. And sometimes we've seen a few positive examples of that recently, where you've seen a major make an investment and ultimately take that company up. And so it's one way to finance and for investors to be able to realize the opportunity that they have to get to conclusion to it from the fact that you've got a major mining company taking an investment alongside them.
Yeah, it's interesting. You talked about those margins getting squeezed, and even at the high gold prices that we have, it almost seems as though some of these mergers and acquisitions, or some at least of these strategic partnerships, are increasing efficiency and taking some of those costs down. Could that stabilize the equity side too?
To a certain extent, yes. At those sizes where you can get efficiencies with respect to head offices, and you say take some of the redundancy out, and that's often where the benefits are seen when you do M&A activity. Or a company may have a strategic asset which is close to an existing mining company, and therefore they'll take that investment. And you're right, it's about getting efficiency of capital, because we do have to bring generalists back into this space. As you know, here there are many people, as Rick's talked about, who've been invested in the industry a long time. I have. It's my major investments are in precious metals. But we have to bring in new investors from outside, and what they want to do is see that efficient return of capital and also return back to shareholders. And that's a great thing that I've seen. I'm invested in some of the larger major gold mining companies, and they're providing me a dividend back, which wasn't always the case, and one where they're competing for other industries in that regard. So we need to have that discipline of a return of capital back to shareholders.
We talked here on the Living Legends panel, and you are a living legend. And when I say that, I mean, you're sitting doing deals, and you don't have to. So I guess my question is, how big of an opportunity is this next run?
Good, from the fact that as we look at the aspirations for 2050, as we talked about, we need lots of new metal to be able to achieve that. We need more copper. We need rare earths. We continue to need gold. And so those who are coming into it now, who may be in their 40s, as I was, it's a great opportunity for them. Now almost 70, I'm vested in it and look forward to the next decade, and excited about some of the companies that are here with the assets they have that eventually will realize production, because we do have to do quality exploration, and that's a great thing that Rick recognizes here as he goes through and looks at them all, and he's been in the business a long time. And I'm excited about it. Prices will go up and down. So if you're looking in the short term, then some people can get somewhat maybe disillusioned about it. But when I look at that 1977 lens that I look at, this industry has been very good. My investments in, let's say, in copper shares and stocks is now coming to fruition. And I think there's only further upside in them as there is in precious metals.
Yeah, we're hearing Rick talk about this 5 to 10 year path where you really can't be looking at the stock every day. Talk to me about how important that is to keep the ball on the prize, your eye on the prize here at the end. What's that look like?
Well, with respect to Dakota, it's continuing to drill these great assets that we have. We have a great team down in South Dakota. I got involved because Jerry Aberley has been working in the lead district most of his life. James Berry is our exploration manager, worked underground. So they know what the final prize looks like. They know what the old mine looked like. The fact we're north. So in that specific one, I'm excited about the prospects we have in Dakota. But if I look across the industry, that yes, I'm well invested in many of the major mining companies because of the fact that we do need these. If you look at all the infrastructure, if we're going to power electric vehicles, we need power lines to be able to do it. So it's not only maybe the copper, but we need steel and you need the metallurgical coal. So there's a whole suite of metals that we need in order to meet these aspirations for a greener world. And I think this next 10 years from, into the mid-30s is going to be good for the industry in that regard with the inherent, fluctuations that we see.
Yeah.
So I'm all in on it.
Okay, technology-wise, how important is technology in the mining sector? I mean, there's certainly a lot more of it. In this 40 years that you've been, is it increasing efficiency to the point where margins are increasing because of it too?
I wouldn't be able to speak specifically to that. Intuitively, I would say yes. If you look at autonomous driving trucks, Caterpillar has a number of them. There are many major mining companies that are operating them. BHP, perhaps, I think has one of the largest autonomous mining fleets operating in Australia. We have some operating in the oil sands in Canada. The interesting thing about them is they don't have accidents, right? They're able to operate those trucks with great efficiency. Sandvik has in-pit drills where they can actually go in and do the drilling autonomously. And they get much better precision because rather than having maybe a human doing it with a slight human error and not hitting every 50 centimeters. So I think there's lots of opportunities. And what that does is allows us to bring in different talent. Because one of the challenges for industry is talent. We need talent to be able to blast at the mine phase, but we need talent to be able to manage all of these systems. And there's many more opportunities for individuals who may have computer science backgrounds to be able to come in and operate autonomous trucks, perhaps from a head office, and be able to do that. So it helps expand the cohort that we can get into this industry.
Yeah, we do a lot of macro talk here at Kitco News, and it's often for me to remind people that, mining really does affect the economy, especially when we go into a green transition or an energy transition with the grid like we are going to be. What does the next 10 years look like? I know we don't have a little crystal ball here, but what's your prediction?
Well, 10 years as it relates to the mining industry,
I think so, yeah.
We are certainly going to need more talent. We're going to need more mines coming on. It would be nice to have some of those mines in our own jurisdiction so we can meet our own demand. We need to continue to educate society about the importance in order to meet our 2050 aspirations for a greener world. And we're going to continue to see capital, I think, be able to come in as we continue this education and people understanding the impact that mining has in their everyday lives and how they need to support it. Maybe it can bring some of the generalists back in. If you're going to have AI or if you're going to have a Bitcoin, you need the whole electrical systems to be able to support those. And those come from the miners. And so we need to continue to make that connection in people's everyday lives. And I think that's important, and that's what we're already seeing. There was a survey done by the Mining Association of Canada, and they find that 80% of Canadians are favorable towards mining. That wasn't always the case because they now start to understand its impact on their daily lives. So as that continues to grow, it means we're going to be able to bring mines in perhaps more efficiently, more effectively, and with the support of the general population.
Well said. And you're educating now. Bob Quartermain, Director and Co-Chair of course, Dakota Gold, joining us at Kitco Now. Thanks again for making the time for us today.
Great. Always a pleasure to be here.
We appreciate it. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for tuning in today. Of course, we'll be here all week with exceptional content coming your way. Stay tuned.
Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.